Let's talk money.
Welcome back. This is the Diwali special edition of Let's Talk Money, and we are ensuring that you remain on the path to wealth and prosperity. Come what may in the markets, they can go up and down, but you need to ensure that your portfolio is on track. And Ashish is going to help us do just that. He's already told us that Ashish, you're saying about 50% for a medium risk investor, 50 to 60% can go in equities. So let's go a little deeper. The industry keeps saying and experts keep saying buy large cap funds. People still want to chase alpha. So you tell us some 2-3 interesting funds that you would look at for this new year.
Yeah, so what we are telling our clients is that you stick to flexi cap funds. See, a large part of the alpha has already been created. If you look at the last 3 years, although Nifty has done about 12%, the mid cap and small cap funds have done far better. I mean, they've done last year about 40-50% kind of returns. Obviously, a lot of the stocks in those sectors have got re-rated. So going forward, one needs to be a little more discerning. So some of the funds that we like in the flexi cap space are Helios flexi cap fund. It's a small fund run by a veteran fund manager, has done reasonably well, and we are confident it will continue to do well going forward as well. And we like Franklin flexi cap. It's come back pretty well after all the challenges they had on the fixed income side. The equity team continues to do extremely well. And the third fund is 361 flexi cap fund. Again, it's a small fund. And the fourth fund, if I have to add, will be the Motilal Oswal large and mid cap fund. So we are preferring the slightly diversified portfolios to, let's say, concentrated funds like mid cap or small cap. Not that we are bearish on mid and small caps, but I think one has to become far more discerning. And a fund manager giving him the flexibility to invest across market caps is the need of the hour today.
Okay, fair enough. That's good advice to sort of keep in mind. On gold, Ashish, like you're saying that you're still optimistic on it. So would you keep the allocation to as high as 15% of the portfolio? And what is the vehicle? I mean, from sovereign gold bonds to ETFs and funds, how would you get into gold?
See, we've always been messaging for 10 to 15% allocation in gold. I think more the equity exposure, the more the allocation to gold. So if your equity exposure is in excess of 60%, then having 15% in gold helps, because then it acts as a insurance asset class. Because if equity falls, then gold typically tends to do well in those periods. Earlier, sovereign gold bonds was a fantastic vehicle to take gold exposure. But as you know, the government has stopped issuing sovereign gold bonds because it was too good to be true. But what has happened is the taxation on gold funds has become very favorable after this budget. So earlier, they were taxed at marginal tax rate. After this budget, they've again brought back long-term capital gains rate on gold bonds if you hold it for gold funds, if you hold it for more than 2 years. So the best way to take exposure is these gold funds which feed into the ETFs. So you have liquidity. At the same time, after 2 years, you end up paying long-term capital gains tax. So that's a great way to take exposure into gold.
Okay, got that. So that's lots of advice on the funds to look at and how you can look at gold as well. Radhika, let me ask you, we spoke about thematics, but I also want to get your take on the multi-asset fund category, right? I think in this year, I have heard a lot on MAFs as a product. Now they're called. I think there's a fund house also running an ad saying MAF, right? So why the appeal? Do you personally like these products? Because they do bring a blend of equity, gold. It can be multiple asset classes, right?
So I like the hybrid fund category in general. I think with the fixed income taxation norms, taking outright exposure to fixed income is not the most tax efficient, and people struggle. Even if you're trying to take long-term debt exposure, people struggle with timing fixed income. So I think blending equity and fixed income and multiple asset classes into a single product is very good. So whether it is aggressive hybrid, whether it's balanced advantage, or whether it's multi-asset allocation, I like the category. I think it's a very, very underrated category. And in fact, in bull markets like this, I think people tend to ignore this whole category of funds. With MAF in particular, I think it's a very good category. The only thing is, in the industry, MAFs are the least well-defined category. So, you really need an advisor there to guide you on which kind of MAF, because there'll be people taking very low equity exposure, there'll be people taking very high equity exposure. So there's little less standardization in the category. But fundamentally, I think the idea of blending multiple asset classes into a single fund is very tax efficient for the consumer.
Radhika, what about you? I mean, if you were to look at suggesting someone an MF bouquet, and I'm sure you get asked this question all the time personally around friends and family, what would your recipe or advice be for the new Samvat?
So I keep it very simple. I say that if you're a moderate to aggressive investor, you should either be in flexi cap or multi cap. I tend to echo the view that mid caps and small caps are not cheap, but I think moving to completely large cap is not the best idea, because I think people should build decadal portfolios. And if you want an accurate representation of the Indian economy, you do need some dose of mid and small cap, because large caps are concentrated in a certain set of sectors. So flexi cap or multi cap tends to have a little more mid and small cap. Flexi cap tends to have a little less, but flexi cap or multi cap is what I recommend. You can also do a large and mid cap index fund if someone wants to do that. For conservative investors, I am very pro a category like balanced advantage. I know it's not been popular over the last 1 year, but we are actually seeing that change in the last couple of months of volatility. So conservative investors can really look at balanced advantage funds. I really think they're all weather.
Okay, all right. Plenty of ideas there. So finally, coming to last thoughts. And Radhika, you go first, because I think the industry in the coming year perhaps will offer us newer concepts, strategies, and products, because we know that the regulator has okayed this idea of a new asset class. It'll be set up by asset managers like yourselves. So what should we expect from the MF world this year? And what would your one wealth tip be? Something to do or something to not do? Any wealth tip for this Diwali?
So I think the MF industry has been super innovative. If you look at the last year, for instance, the innovation that's happening both in the active and passive space is incredible. For instance, factor-based investing, particularly on the passive side, has taken off. You're also seeing a lot of factor-based ideas on the active side. So the MF industry never stops being innovative, and I say that in the best possible way. We are certainly very excited about what is going to come out of the new asset class, already cooking a bunch of ideas internally and working with SEBI to develop that. So I think we'll have more options on the platform for investors. I think wealth tip is keep an open mind, because the world is expanding so much in terms of products and offering, but also keep it simple.
An open mind, but also keep it simple. All right, that's a fairly evolved tip to be able to do both in a well-balanced way. Ashish, closing thoughts and your wealth tip for this year.
Yeah, so see, as the market keeps going up and we continue to be positive on the Indian economy and markets, you will get a lot of narratives, right? So my wealth tip will be, don't get carried away by narratives. Do your own homework, speak to your advisor, and then take a decision on the portfolio. Because as various sectors do well and they show returns, it's very easy to get carried away into sectoral funds, into thematic funds. But we've seen in the past that ultimately it comes to hurt your portfolio. So beware of narratives. At the same time, be positive. And the next 2-3 years look pretty good. But, have some balance in the portfolio.
Okay, all right. Thank you very much, both of you. I think those are really enlightening ideas that are going to help our viewers. Radhika, once again, wish you a very happy Diwali, and to you as well, Ashish.
Thank you.
And that's where we will take our viewers' leave on this special Diwali edition of Let's Talk Money. Here's hoping the coming many months and years remain very, very prosperous and positive for you in every possible way. Thank you for watching.
Let's Talk Money.